You are listening to ChartingWealth.com for Monday, the 3rd of October, 2016. Welcome to a new month. The market closed above our weekly trend line. As we jump into the markets looking at IYY, which is the iShares Dow Jones U.S. Total Market Index Fund, it tracks the whole stock market, and the market was up on Friday, 0.74%. Now, we had originally on the prior two-day candle ending on the 29th of September, we actually had a spinning top. That meant indecision in the marketplace. That had been after a down candle on the 27th and two strong up candles on the 21st and 23rd of September. Market turned around and continued up. We still don't have a crossover going up on the MACD. The market has been going in a downward momentum since the 24th of August. The derivative oscillator continues to lose its downward energy, and the MACD has moved up toward the signal line, but it still has not crossed. It did that previously back on the 19th through the 23rd of September and never crossed. We shall just continue to watch. We did, however, at the end of the day on Friday, we did break the weekly trend line. So we closed above that on the chart. If we look intraday, let's take a look at what's going on. We can see the market opened, moved above in the morning, the weekly trend line, and on up in the afternoon, crossed over, going up. And again, it's been very herky-jerky. How's that for a word? But truly, the market crossed over going down on the 4-hour chart back on the 27th. That is in the morning of the 27th, and then crossed over on the afternoon of the 28th going up, crossed back over going down on the afternoon of the 29th, and then back over again the morning of the 30th going up. So we have a very odd and strange market. We did see the derivative oscillator finally flipped over going up. It did do that in the afternoon on Friday. So we have a confirmed up move on the 4-hour chart. Again, still we've got a down move on our 2-day chart, and our derivative oscillator still negative. And again, the weekly chart, we're going to do the weekly review and forecast after this broadcast. It is still headed down. That's the total market. Let's look at the S&P 500 via SPY, an exchange-traded fund that tracks the S&P 500, those 500 big stocks, lots of volume in the market. It too closed above the weekly trend line. Of course, our 2-day trend line was broken all the way back on the 21st of September, and we've been unable to draw an accurate one since then. MACD is moving up toward the signal line. Derivative oscillator is still negative. If we look intraday, what do we see? We see that we've been going up, crossed over going up back on the afternoon of the 20th, Tuesday the 20th. Market zoomed up for a couple of days, then down, then back up again starting around the 27th. And up in the morning and the afternoon on Friday the 30th. So again, we've not had that pullback end. It continues to pull the market up. Still in a confirmed down move on the weekly and the 2-day chart, waiting to see if at the beginning of the week this SPY is going to rotate over going down or if it's going to pull the whole market up. Just have to wait and see. Hasn't happened yet. Now, let's go back to our 2-day chart, and let's go to the Qs. What's the Qs? That's the NASDAQ 100. The tech stocks continues to zoom. Remember, this is of our 3 charts. This is the one where the weekly chart has been in a continued uptrend, and we have been warning you about that because all things being equal, the market always tends to move in the direction of the biggest chart, even though the 2-day chart was in a confirmed down move and still is. However, derivative oscillators continuing to lose energy, and we may see the market kick over on that 2-day chart moving up. Has not happened yet. Let's look at what happened intraday. We saw that the market had been down on Thursday, popped over, actually crossed over going down on Thursday, and then on Friday zoomed up again. Again, paralleling what? The weekly chart. And again, remember The 2-day chart's still in a confirmed down move. So, but this is curious. If you look closely, yep, right at the end of the day, it did finally cross over. Now, I would not call that a confirmed crossover on the MACD on the 4-hour chart. It could just as easily Monday morning rotate back over. So pay attention to that. We did see the derivative oscillator at the end of the day on Friday switch over to green. It had not done that over the course of the last several days. So we'll continue to watch what the Qs is up to. Now, lastly, going to take a look at gold. What's going on there? Gold was down 0.32%. Oh, for the record, the Qs was up 0.71% on Friday. For the record, gold down 0.32%. Gold's been in a confirmed down move all the way back to the 8th of August. Gold is still in a confirmed down move on our 2-day chart. We did draw a trend line. Gold is well below that. We may redraw that trend line here very soon. Gold is still below. If we look at our 4-hour chart, what do we see with gold? Is that 4-hour chart of ours not gold? Look at it. If you would have followed that chart, jumped in, it continues to work as a trading chart, as an entry chart, as a trend chart. It's just beautiful. Just beautiful. So again, it started working. If you all remember, those who have been following us for a while, that chart stopped working at the end of last year and then started later in the year and has been worth its weight in gold for almost every move since then. Just beautiful. Anyway, that's where we ended up the market on Friday, so pay attention. Some important things could happen. If this market rolls over on Monday, you may have some good entry points for some down plays. So continue to pay attention to that. And those of you who jumped into gold, I hope that you are racking it up in your virtual trades. Now, I will remind you, we just put a couple of days ago, and a lot of you have been giving us great feedback on it, how to use your daily market worksheets. If those of you who subscribe, of course, have access to our daily market worksheets. What does it take to subscribe? Not much. You can go to the website chartingwealth.com, put in your email address, your first name, and we will put you on the mailing list. You will get with that 3 things. You'll get our daily market worksheet. You'll get our How to Read a Stock Chart video, a link to that, and you'll get the layout that we use at freestockcharts.com. All of that for free. So please, once you do that, load up that worksheet, print out several copies for yourself, listen to that training that we have. It's both at YouTube and at the website. It is there for you. It is a great training on how to use that market worksheet. You get to see one I filled out, and then I go through what the market was doing that day and how I filled it out. You will get so much from it. Let us hear from you. You want to help us out? Go to iTunes, subscribe to our podcast, give us a 5-star rating, say something nice about us. Go also to YouTube and subscribe. Guess what our subscribers got first? They got the new training on how to use the daily market worksheet. Like I said, our subscribers get first treatment to everything. Thank you so much. Oh, and listen to the latest chapter in the book that we're putting together, Charting Wealth. Please listen to that. You can watch it on YouTube. You can also catch it at the website and on iTunes. Thank you so much. God bless. Hope you have a great week learning, trading, practicing, doing all the things we ask you to do with your virtual account. Thanks so much. God bless from chartingwealth.com.